And we are here at the Blockchain World Conference in Atlantic City, and I'm here with Nick. He is the CEO and founder of Viva. Nick, thank you so much for being here today.
Hi, Anthony. Thanks for having me.
So tell us a little bit more about your company.
So Viva is a peer-to-peer mortgage platform and tokenized mortgage exchange. So what we do is we introduce private mortgage lending into the international sector. Essentially, tokenizing mortgages means that we'll take an individual mortgage note and we'll tokenize it. Once we tokenize it, we upload it onto our platform, and people from all around the world will be able to buy those tokens and receive the interest and principal associated with the mortgage. So what it's doing is it's democratizing the mortgage process, opening up to the public. And in the past, this has been something that's been very limited to just large banks and large financial institutions.
Wow, that's amazing. And where are you guys headquartered?
We're in Bermuda right now.
Wow, that's amazing. And so are you guys only operating in Bermuda? Do you have plans to take it international? Tell us about that.
So some of our team is working out of the States in New York City, but most of us are in Bermuda. And the reason why we're in Bermuda now for our company registration is Bermuda is one of the most advanced blockchain and digital asset legislature countries in the world. So they have very advanced regulations in this industry. It's a jurisdiction that's very blockchain friendly, and they've helped us a lot in setting up. They've been on our team, as opposed to so many jurisdictions around the world make it quite difficult for innovative new companies in the sector to operate. They've been the opposite, extremely friendly and pleasant, and they want us to be there. They're inviting, so it feels good. Our team's excited about Bermuda, and we're excited to continue working there.
Awesome. So how are you guys involved in the mortgage industry, and is this only for professional people who are involved in cryptocurrency, or can anyone get involved?
Yeah, so this is for anyone. It's actually, on the contrary, it's not really for people involved in cryptocurrency. This is for fixed income investors and regular home buyers around the world. So for instance, if you're in a country that we operated and offered mortgages in, we would have to have a physical presence there, as we need to credit profile you and make sure that loan is approved. But if you're looking for a mortgage loan and that you're in a country that has an inefficient credit system, so let's say you only have a couple banks who offer mortgages, or let's say there's corruption in your country, or there's collusion. If you're a very creditworthy borrower and you're looking for a loan, no longer do you have to rely on that local institution, that local bank, to get that loan. Now, with this tokenization system and these borderless digital assets, you can acquire that capital to buy your home from crowdfunding investors, thousands and thousands of investors around the world, using our company. So what it does is it tears down the barriers and democratizes that process and opens it up to the public.
Oh, that's amazing. And you guys have your own coin, and did you recently ICO?
Yeah, so we just completed our pre-sale, and what we're doing is selling what's called the Viva Token. Now, the Viva Token is a utility token, and it offers a 75% discount on the transaction fees on our exchange. So what our exchange is our fractional mortgage share exchange. So once investors own these mortgage bonds that you can get through the tokenization system on our platform, you can have a diversified portfolio. And if you'd like to enter or exit other positions, we have a secondary market exchange that we also host. It's like a mortgage bond exchange. When you trade on our exchange, there's a transaction fee just like any other exchange. And by using that Viva token, you can get 75% discount off of those transaction fees. So theoretically, you can increase yields by using the Viva token to pay those fees.
Wow, that's amazing. So who is your target demographic as far as customers? Like, who should be using Viva? Who should be aware of it in the market and looking at it?
So it's really for credit-worthy individuals in countries that have inefficient credit systems. So for instance, the United States, this is amazing for the United States, but they have a very advanced credit system. And so does Canada and the UK and Japan, Hong Kong, and a bunch of other countries. So in these countries, the free market may not be interested in beating the regular bank loan, the regular banking interest rates that you can get here. But for instance, maybe in Bermuda, where a very maybe a multi-millionaire would still be paying 6 to 7% possibly in Bermuda on their interest, someone in America might want to be interested in purchasing a fraction of that return from that very creditworthy person, and we're making that possible. So the demographic is for creditworthy individuals. We're not looking for high risk borrowers. So creditworthy individuals in countries that have inefficient credit systems. So a lot of Central and South America are subject to these inefficient credit systems. A lot of the Caribbean, some countries in Europe, some countries in Africa as well, could all benefit. And hopefully eventually the system will advance to the point where the free market will even be able to beat some of the interest rates in more advanced countries.
That's amazing. That's a very innovative product. So you guys are essentially democratizing lending and giving people the opportunity to buy homes that may have been taxed at a higher interest rate, and essentially having people who are overseas, they're in these emerging markets, have the ability to have lower interest rate mortgages. So this can help a lot of people.
Exactly, and that's what we're driven by. We're driven by the greater good. We're driven by the fact that so many people in the world today have just accepted this situation of credit. And when I say that, I mean we give our money to the bank in our savings accounts, and they're lending it out for sometimes exorbitant interest rates, and we're getting 0%. And intuitively, if I said that to you at par value, you wouldn't think, oh, that's not fair, that shouldn't work. But that's what happens, and we've come to accept it. And the free market wouldn't truly accept that. The only reason that exists, and that's still a thing, is because there's extremely high barriers to entry in this industry. What Viva does is we tear down those barriers. We fractionalize mortgages into tiny shares of that mortgage, into 1/100,000th of a mortgage. So anyone with as low as $10 can get involved in an individual mortgage, and therefore you can have hyper diversification on your portfolio, and you still return that you get that collateralized fixed income associated, which is interest associated with that mortgage.
And super low risk, right? Because if you completely diversified your portfolio down to $10, that's amazing. One of the concerns that I kind of have in my mind is when I think of cryptocurrency, when I think of coins, I think of a lot of validity, and I wouldn't necessarily want that validity happening in my home. So again, I'm ignorant, so give me some education. What type of validity does Viva have? And how do you guys prevent that same type of validity happening in the mortgage?
So validity as in risk associated
price
with
fluctuation.
Okay, that's a very good question. So we don't actually use cryptocurrencies for these mortgage loans at all. We do use the blockchain tokenization technology. So we use that distributed ledger to fractionalize these mortgages into tiny little shares. So what we use so when you're financing, or when you're investing, buying these mortgage bonds, or when you're getting a loan to buy a home, the person you're buying a home from might not want Ethereum. While I would take it, but they want probably dollars or their local currency, and so for that reason we use U.S. dollars or the equivalent stable coin for a U.S. dollar currency. So there's no coin fluctuation in the investment process or in the return process. It's all in stable currency, and that's not a factor of our particular model.
Interesting. So you're leveraging cryptocurrency technologies in the distribution of the equity of the mortgages, but you're not using it as there is no fluctuation because each share represents a share of the mortgage.
Yeah, that and the fact that we use stable currency like U.S. dollar equivalent digital assets. So they're always pegged to the U.S. dollar, just like the Bermuda dollar is pegged to the U.S. dollar as well. So it's a pegged digital asset, therefore there's no fluctuation. If the price of Bitcoin goes to $1 million or the price of Bitcoin is $10, it's still going to work the exact same way, and it doesn't affect our model.
Interesting. So I have maybe like one or two last questions here. So, how do you guys vet a potential lender when they are coming to Viva if there's no credit score the way there is in the United States?
That's a very good question. So uh, there's loans, mortgages are provided in many other countries, and although they might not have a FICO score like they do in the United States, there's other ways of vetting their credit, and regular banks do it. So we vet the valuation of the house, we vet the length they've had at their current occupation, they vet bank statements and various other credit approval processes, the exact same and it would vary from country to country. Right? Different countries have different infrastructures for assessing credit scores or credit assessments. So we would do the very typical local credit approval process. The difference would be then that we have the origination of that capital is through global crowdfunding investors buying those bonds that we fractionalize from your mortgage. And another good question was, if they were to default on their loan, let's say they got this loan from investors all over the world, and they just stop paying the mortgage rates. So what we'd use is insurance policies and credit default swaps to make sure that if someone defaulted on their loan, the investors holding those tokenized mortgage bonds, they would get instantly repaid from the insurance country that has underwritten that mortgage contract. So it gives a lot of safety and assurance to investors from around the world.
Wow, so this sounds like a very practical and stable use of cryptocurrency technology, as opposed to some of the kind of get-rich-quick schemes and things that you see in the ICO space. You guys are serving a real need as far as a global economy of mortgages and home buying. There's definitely a social impact aspect to it, and then in addition to that, it does not seem speculative. It seems extremely practical.
Yeah, and that's our goal. I know we've seen a lot of, kind of speculative, kind of crazy ideas, and some of them are awesome, some of them not so much. This is more so, it's maybe not be that exciting, mortgage lending, but I think it's quite exciting that we can democratize this process. I mean, if you think about it, the banking industry, their bread and butter is mortgage loans, and it always has been. That's their. I mean, we've been talking about cryptocurrencies taking out the banks because you can transfer currency and remit money or value. I think that's a very small part of the banking profit model, and I think the big part are the loans, and that we can do so much better. If you really think about it, these big skyscrapers in New York, they're there for a reason. It's because they're making a lot of money off of loans, right?
Yeah.
Now, if we can give the profit from them back into our everyday pensioners, our investors, our savers, into their savings accounts, if we can return that money into our savings accounts, and then we can also give the same people who have a mortgage a better rate on their mortgage, then our economy as a whole is going to do better. And I think it's a more free market system. There's less barriers to entry, and I think it will serve the greater economy and the greater good quite well.
Absolutely. And I mean, that kind of makes me remember when I was growing up, you could get a savings account and you could get a really high interest rate savings account. It's really not the case anymore. As an individual, it's hard to get a good return. So for someone, like you said, with their retirement or their pension or their savings, putting some money into these securities where you've vetted the mortgage holders, it allows them to start getting better returns on their money.
And furthermore, not only do we vet them initially, but the individual investor investing in that mortgage vets them. So they can decide if they don't like my risk because they don't like where my house is located or it's in a country that they don't really trust, you don't have to purchase my mortgage. You get to individually choose which mortgage loans you want to be invested in, or you can hyper diversify it with we have diversification algorithms. So you can say, I want 10% Argentinian high yield loans. I want, in my 50%, I want G20 low risk, mid yield loans. So you can choose your own allocations and you can choose your own risk, and you don't have to go anything beyond what you feel comfortable with. So it's not on us. We connect you and the different borrowers around the world. You make that decision. You invest on your own will, and you get to vet them fully, and it's a fully transparent process.
It's amazing. And So as far as banking and disrupting the banking industry, there's a lot of coins, and they're like, okay, we're going to disrupt the banking industry because you can buy a pizza or you can buy a hot dog with a piece of coin. And if you really think about it, banks' main bread and butter is homes. Grant Cardone, he's huge into real estate, he said that if you want to see what's valuable, the most valuable thing in our economy is real estate. Banks won't invest in your business. They're not. It's very hard to get a business loan from a bank, but they will absolutely invest in a home. If you have a home as equity, they will value that. And so I think as far as disrupting the banking industry, I think you guys are really positioning yourselves to do that.
Yeah, and here's why. If you're going to give out a loan to someone, do you want to give it out to them? Do you want to give them some cash? Or do you want to have the title deed of their home? That home is not going to run away. It's not going to, and the government will enforce that contract for you. So it is by far the best collateral you can give as far as loans, and loans are very, very, very big industry. Yeah. So yeah, it's definitely, disrupting a very, very big industry if we can make it work exactly how we want to, and we need the support of the community. We have the tech, we have the platforms, now we want the community to get on board, understand what we're doing, and support our cause. To give you a scale, if you just want to think about it in practicality, what's the biggest purchase someone makes in their life? It's their home, right? And usually people need to get financing for that purchase because it's extremely large. And it is a very, very big business model. It's a $31 trillion industry around the world. So that's a lot of money, and it's an inefficient system. We haven't seen very many advances in this whole industry in a long time. It's still the same banks giving out loans that it was 100 years ago. So we want to change that. We want to improve this and incorporate this technology that truly can democratize this industry, give it back to the people. Those profits that are building those skyscrapers, it's an inefficient system. We want to make that efficient again and democratize it for the people.
Absolutely, and you're also kind of democratizing sharing in the revenue, sharing in the success of the banks. Being able to invest into properties on a global scale is huge. Currently, I'm looking to purchase a home in Puerto Rico for personal use. Would this be available to an individual just looking to purchase a home?
Exactly, and that's what we are starting out in residential mortgages. So that's only who will be available. So. How you would do it is you come into our office in Puerto Rico. Once we get established there, we would tokenize your mortgage for you, which we would represent your mortgage with 100,000 fractions of your mortgage. We'd submit it to our platform, and then investors from all around the world would be able to see that loan. So maybe if you hadn't had a very stable job for very long and you didn't earn enough that they felt it was safe, they would say, I'm not going to invest in that. Or some people might say, wow, that's a great interest rate that he's going to pay. I think that's a very good neighborhood. I think the real estate economy in Puerto Rico is going up. I would love to have that 7% interest on my balance sheet.
Wow. So the market decides whether or not they want to invest in you getting that loan. That's amazing.
Yeah, it's not us. We connect the two. We have the platforms, we have the framework, and we have the technology. But ultimately, it's between the borrower and the seller, and we broker that and connect the two.
So as a, not a lender, what's the opposite of a lender? A borrower. As a borrower, and I'm coming onto your platform, do I have the ability to add a little bit more to my story rather than just my name and my social security number? Like, can I tell you, hey, I'm trying to buy this and flip it, or it's a fixer-upper? Like, is there an ability right now on the platform to add some more context to it? And if not, is there plans to do that in the future?
Yeah, so what we do is we have in-house mortgage professionals who would then, and they would assess your loan and your credit on an individual basis. Without that, at this time, it's not very feasible to imagine that you can go onto an app and get accurately assessed for your credit and your credit worthiness. So it would be an individual assessment based on what's going on with you. That mortgage professional would then give you a risk rating, right? So depending on all the conditions, all the stories you want to tell, that would be included into your risk rating. And there's 3 different risk ratings that we can go into more, and you could find out more about this process and how it works and the credit approval. Some of it's quite unique and new, and if anyone's interested, I'd recommend you check out www.vivanetwork.org. And we have a comprehensive white paper and some other explainer documents like videos that make it easy to learn more about how it works exactly. But ultimately, the basis of it is the credit and all of what you were saying, the credit score and asset value. That's all very...
You're not reinventing the wheel. You're taking these principles that have been used in international lending for years, and now you've kind of democratized them and digitalized them and brought them to a broader audience.
Yeah, the difference with our system is where that capital comes from is different. That capital comes from the free market, as opposed to, but all the rest is the same. Yeah.
Very interesting. So I'm really, really excited about this product. It seems extremely disruptive, extremely innovative. If people want to find out more about Viva, where should they go?
Yeah, www.vivanetwork.org. You can also contact our email address, which is info@vivanetwork.org, and we'd be glad to help you out, answer any questions you have. I know it's a big project, and there's a lot to learn about this, and especially if you're not extremely familiar with blockchain and the tokenization technology, but we'd be glad to help and personally answer any of the questions you have.
Awesome. Thank you so much for being on the show.
Well, thank you.